Good day, traders. How are we doing today? Today is Wednesday. Yes, midweek. We're in the middle of the week. There were some good trade setups yesterday as well, but I didn't do the video yesterday, as you guys know. So this is today, and it is on the 1 minute. Come on, there it is. It's on the 1 minute time frame because there wasn't much movement. I had to break it down to the 1 minute from the 5. Some days I shoot it on the 5 minute, some days I shoot it on the 1 minute. So today we only see trade setups on the 1 minute. So let's take a look. So we're looking at the NASDAQ 100. Okay. It's on a demo. See up here? If you look up here, maybe it cuts it. I think it just grabs it. It's a demo account. There's no real account here, but it's the same thing as a real live chart. It displays the candles the exact same way. Okay? So let me show ya the setups for today, okay? So if we started trading before the open, this dashed gold line right here, it says 1628. That's 8:28, 8 a.m., right? So we're showing you from here. I just want to show you all the setups. So we're going to go in here. We're going to grab this trend line tool. And if we do a double top, just like that, okay, close enough. And right from here, in here like this, right here like this, see? See how it's going down? This one should be, it's a double top, trust me. There it is, okay? Come on, you little bitch. The fucking thing won't grab the fucking thing. There. Fuck. Sorry, it was pissing me off. It got to me. My patience run out. Very, very thin. So you see right here, and here, double top. Okay? And right here, see, and it comes down, see, because it's lower on the right side of the divergence on the OSMA. I use the OSMA with regular settings 12, 26, 9. Okay? I want you to see that. And I'm running it from this time to this time. It's going down. It's divergent, so you would have got short. So we would have grabbed a arrow down. You would have got short somewhere right in there, okay? Your stop would have been just above this high. It did not go back there. Came down. You would have made some points right here if you did a quick scalp. From right here, you know, there's 12 points you could have took right there, okay? But if you held on, as you can see, it came back up, but your stop would be up here if you held on. And as you can see at 12:20, at 16:28 right here, that is 8:28 a.m. Eastern Standard Time. And as you can see, it opened up for the stock market and it went down and back down and back up, da da da. So that was the trade from up here, and the amount of you could have made all the way down here was like 100 points, okay? Pretty sure that's 100 points. But anyway, down she goes, okay? So then we put in low and lower lows. There was no divergence here because the 5 needs to be above the 7 and crossed up for you to enter here to take it up, right? So because the 5 stayed below the 7, well, it went up here. If you did get in right here, well, it came back down and it got your stop. That would have been down here. But if you waited for, you know, some more clear direction, let me show you. Where's the arrow? I'm trying to grab the wrong arrow, Jason. So if you got in here, you could say, hey, it came back. Your stop would be here. Well, at least this is where I'd put my stop if I decided to do this trade. And this trade was happening at 16:46, which is 15 minutes to 9. Okay, it was just after the open of the stock market. So say you would have got in this one, you would have had a loser on this one, and then, but there's no divergence there now, is there? No. Or yeah, I guess there was. There was. Okay, the divergence was right here. Okay. Okay. And like this. Yeah, it's right here. See? There was divergence, but it came back down here and would have hit your stop. So say you did this as the second trade, okay? The second trade would have been right here, okay? See, me, if I would have got in right here, I would have got out right here. I would have, as soon as it came back down and it was closing, the 5 was closing below the 7, I would have got out of that trade. I would have had a small losing trade. Then I would have waited. And when I waited some more, I would have waited for this setup right here, okay? Which we drag this sucker right up like this, okay? And we drag this sucker right down like this, okay? And that's our setup right there to go long, and up it goes, okay? And that was at 10 minutes to 10. Okay, and it went up 143 points. It was a nice rally up, as you can see. And every time we have a lower closing candle, lower closing candle, lower closing candle, those are the dips to get in the trade. Why would you get in the trade and why would you get long? Because the 5 is above the 7 and there's beautiful space between the gaps of these two moving averages, which is the 5 EMA. I want to show this to you. 5 shift 0, okay? Exponential on the close, okay? That's the 5 EMA. Now, the 7 EMA is a little different. See, we have it at shift 1. So we create this separation from the 5 and the 7 so that we don't get, taken out of the trade too quickly. If we would have put a lower moving average, we're using the 7 moving average instead with the shift 1 so that it shifts over one notch this way. So you see the gap. You see it's like a highway. You see the gap all the way up and how it respects it, because this is, displacement 1 on NinjaTrader, and on this one it is shift 1. So on NinjaTrader we have displacement 1, and on MetaTrader we have shift 1. Okay, just in case you're curious, how do I get this and whatever? Well, this is how. Okay, and yeah, you would have done a trade here, you would have been good. If you would have done a trade from up here and you held it, you would have been good. Okay, and now it brings you up to the current candle here, which is right over here. Came up here, we made higher highs. See? Higher highs right there. And this come down right there like that. It was divergence to sell. You would have sold right over here. You only sell when the 5 crosses back below the 7 EMA. When it's above or when it's kissing the 7 EMA, you don't do nothing. Okay? So you had to wait all this time. So this was 3, 5, 10, about 15 minutes before you got into this sell trade. And if you did get into this sell trade, it didn't go very far. It didn't last very far. Now, did it? Instead, it just went back up again. It just went sideways. You see all this sideways fucking crap here? That's because it moves. When it's moving, it's down here on the open. You look for trade setups just after the open. If you're going to wait till this afternoon, like till right now, see it's 11:15 right now, what are you going to get? You're going to get the tail end of this shit right here because it's gone sideways. This is a 1 minute time frame. Remember I showed you at the beginning of the video? So you can see what it does? And it does this fucking shit every day. It's like, don't trade now. You know what I mean? Don't fucking trade. You're going to lose. You needed to trade, find the setup near the opening of the U.S. stock market, okay? Which you could have done a sell here, and you could have done, some buys in here. Even though you lose on one trade, doesn't mean you're going to lose on the next one. You just got to make sure you're doing the right thing at the right time. And that's what this would be. You can see they put in the low here. They went after the stops. See, because they suckered people into buying right in here. So they know their stops were down here, so they fucking took the price down and they got all the stops. Then they fucking took it way up. And that's where you would have got in, and that's where you would have been safe, and you would have made your money, and you would have went home. Hoo, hoo, hoo. That's it. That's all. So that's the way you got to look at this market. If you're going to wait till the afternoon, I'm not saying you can't make pips or points in the afternoon, because you can. But it sure is a lot easier when you trade the fucking action near the opening of the stock market. Because that's where the volatility is. That's where the orders are flowing in and out of the fucking trade. And that's where you make your money. You got to trade with the big boys, okay? And the big boys right here is to be long, okay? Now look at over here. See, it's just fucking going sideways again. See? It's just chop shop shit. That's all it is. So anyway, that's basically the video for today. I hope you learned a few insights of what I'm saying here. I hope it helps you in your trading. I'm telling you not to trade at this time because you don't know if it's going to fucking go down from here and make new lows and go all the way back down, or is it going to go fucking up and make new highs? See? You don't know. That's why you don't trade at this time. Where there's more probability of going in one direction is near the open when all the big boys come in to fucking trade. And that's when you need to trade. You need to trade with the big boys at the right time. Okay? Okay. So anyway, that's it for today. I want to thank you for watching. Once again, my name is Jason Sweezy. I'm an old trader from 25 years ago. I started trading in August. Was it August? No, I think it was more close to May or June. I think it was in May. The first few days in May in the year 2001 is when I started trading. So I'm not just shooting you some shit. I'm shooting you the real experience of what I know and how I trade, and I share it with you guys because I want you guys to win. I don't do this to make money. Okay, I'm not making money from anywhere. No affiliation of anything anywhere. In the past, I did. Okay, I've had systems that I sold on the internet, and people are happy to use them because they know I don't tell bullshit to you guys. I tell you the way it is. I trade, and that's it. I'm sharing my trading knowledge with you guys. So anyway, I hope you learned something today, and we'll see you again. Maybe tomorrow, maybe not, maybe next week. I don't know. We gotta wait and see. I did the video today anyway. So good luck and good trading.